How can I get a mortgage for a rental property? After you've purchased your primary home, many people begin to consider investment properties. And so we thought it'd be important today to talk about a few things that you need to know if you're looking to get a mortgage for an investment property. And so the first thing that you need to know is your down payment has to be at least 20%. So whatever the purchase price is of the property that you're looking to purchase, the down payment that you're going to need has to be 20% of that purchase price. You're also going to want to know how much rent you will earn compared to the mortgage. In a perfect world, of course, the rent that you end up collecting from a property is going to not only pay the mortgage, but it's also going to provide you with a little bit of extra cash so that over time someone else has been paying off the mortgage, maybe the property value has gone up, and that's kind of the general rule around why people buy investment properties. But banks oftentimes are going to get an appraisal on that property to confirm how much rent you can actually earn on that property. And so here's something that you really need to know about rental properties and the income. Many times someone will sell a property and they're going to say, look, I'm selling this property, we make $2,500 a month, and therefore with a mortgage payment of $1,800, this is a really good investment property. And you think, wow, yeah, it is. And you and your realtor, you go out and you make an offer only to get to the bank, and the bank says, well, it's great that the property makes $2,500, but we've got this appraisal here, and this appraisal says that on average rent is actually $1,900 a month. So you know what? That's the number that we're going to use as we process your application. And so just because you see that a property currently earns a certain amount of rental income, keep in mind that when you go to the bank and talk to them about getting a mortgage for that property, that the bank is actually going to get an average of the marketplace or the community that your property is in, and that can have an impact on your mortgage. Some other things that you need to know if you're looking at getting a mortgage for an investment property would be that many banks and lenders will have a limit on how many investment properties that you can actually have. So it used to be back in the good old days that banks would just keep giving you mortgages as long as your credit was good, your credit score was good, and you had enough income and some net worth. But now it's pretty frequent that banks will say, look, we only want to finance 2 investment properties or 4 investment properties. Or some banks will even go the other way and say, if you've got 4 or 5 properties, we don't want to lend to you. We don't want to give you any more money for any investment properties. You might have to find a different lender for that. If you currently have a rental property and you go to purchase another property, and the bank is going through their due diligence and trying to figure out whether or not they can approve you, one of the things they're going to check for is that you're actually claiming the rental income from the first property that you have. And you think, well, yeah, Dylan, doesn't everybody do that? And the answer is no. In fact, it's quite frequent that people who have a rental property, if they only have one, usually they don't claim the rental income at all. But the problem that presents is when they then go to apply for a mortgage on the second rental property, the bank says, okay, well, your primary residence will use your employment income to show that you can make the payments on that one. Your other rental property that you have, we want to see the rental income making the mortgage payments on that one. And so the way we do that is we want to look at your tax return and make sure that you're claiming the income. And many times people just simply aren't doing that. So know that if you're buying your first rental property, make sure that you do it properly, that you do claim the income, that you work with a great accountant who can help you make sure that you're maximizing the tax credits for expenses, and that it does show up somewhere on the radar so that if you go to get money in the future, you can show the bank that, look, I've been doing everything I should be doing, I'm claiming the income, and the bank shouldn't have any problems with that. One of the last things we just want to mention on this topic of getting a mortgage for a rental property is that many times people will say, can I put, for tax reasons, my accountant says I need to put these rental properties in a company, in the name of a company. And so that's fine. For tax reasons, that makes a lot of sense. But for the bank's purposes, many times banks won't let you do that. And if they do let you put it in the name of a company, you know, Dillon Investments or a management company of some sort, they will say, look, the company can be on title, but you, the individual, need to still sign the guarantee and be responsible for the mortgage. So if something goes wrong, if the mortgage goes into default, we're not going after the company, we're going to go after you. So make sure that if you are trying to structure a deal where you're going to put a rental property in a company, that you are working with a specialist with us or with a bank that is able to actually help you do that. So that's something to keep in mind. And if you're interested in purchasing an investment property or another investment property and you want a mortgage for it, we'd encourage you to visit us at emilynow.ca, where you can get an Emily score that will sort of rank your information out of 10. It takes less than 5 minutes to do, but it'll give you a really good idea of what you're going to need to do to get approved, the interest rates that you would qualify for, as well as the banks that will take a look at your application. And so from there, you can get our help. We can help you get approved, or you can send your information through emilynow.ca directly to the bank. It's free, doesn't cost you anything, and we have an amazing client services team that's here to help you in the event that you do need help.